All right, let's just give it one more minute, just checking it to see you can all hear me okay and see the video. Thanks, Mia. Okay. Thank you, John. Thank you. Right, let's get going. Right, hi everyone. Richard Perry on Wednesday, the 2nd of May, my trading webinar today. This big turnaround in the dollar continues to run, and it is having a massive impact on markets. Look at this breakout that we have had. Now, I'm going to talk about this dollar index for a bit, because I think this dollar index does conform to these old pivots quite consistently. Now, that breakout above 91 figure on the dollar index brought us back to 92.50. And where was the turning point yesterday? 92.50, which was the old March low. Sorry, November low, and then January high. So that's a pivot that the market is looking out for, and that's subsequently where we've just consolidated a bit today. If you break out decisively above 92.50 on dollar index, I think you're going towards 94 area, 94.15, which again is an old level that the market has used consistently, 94.15. So again, these old levels do tend to be repeated and revisited. So the fact that we are now at 92.50, if the dollar continues on that strengthening move, then I can expect to see further upside. Now, on dollar index, the dollar, we have had some significant breaks yesterday, and the market is just sort of retracing some of those breaks. Euro dollar in the last few days, 21.55 and 20.90, big sharp downside break. That is now an area of resistance. 60 pips of resistance on a rebound. The market has rebounded slightly today, but not a lot. Sterling on cable broke below 37.10 and also 36.55 yesterday, rallied, unwound to 36.55 now today. Now that is a resistance band, 36.55 to 37.10, and again that is sort of within this downtrend, this recent downtrend of selling pressure. Now I don't know whether you saw it, the RSI on cable 30, euro dollar 29. And let's look. The dollar yen. Is dollar yen also got? Yes, dollar yen up at 70. So you've got these momentum indicators that are at classic stretched levels. Now that's I think stretched within. If the market was in a range play, market is not in a range play anymore. The market is making key breakouts, key breakdowns on euro dollar cable, key breakout on dollar yen. I think that means that we need to think about this as a strong trend, and subsequently on strong trending moves, 70 is not all that limiting. Dollar yen, look at that strong trending move. The RSI got to 84, 85 and spent 3 weeks above 70. Euro, similar. Big sharp downside move back in October, November, Q4 2016. RSI down at 22. It's currently at 29. So when the market does have these strong trending moves for the dollar, it does tend to go oversold below 30. So I wouldn't necessarily take 30 as especially limiting. You might get a bit of consolidation, but I think ultimately there is further moves in this dollar. And the reason that there is further moves in this dollar is that through the first quarter of this year, the market was convinced, I was convinced that the ECB, that the Bank of Japan were sort of making maneuvers towards tightening. Now, those banks, or those signals that those banks had been giving out, have now been sort of unwound. They're being backtracked on. You're seeing that the growth figures in the Eurozone are sort of falling away. Inflation not picking up. The ECB subsequently turning a little bit more dovish in recent speeches. Bank of Japan, similar story. The biggest one of the lot is obviously the Bank of England, whereby Mark Carney sort of massively backtracked on sort of his comments in the inflation report from February, and the sort of manoeuvres on the Bank of England Monetary Policy Committee that had a couple of guys had voted for a rate hike at the last meeting. Now we've got the Bank of England in early May, so yeah, it's not going to hike rates in May. Market had been anticipating May. It's not going to happen. It might not even happen. It's unlikely to happen in August, and it may not even happen in November. They would be the 3 months that it could possibly hike. Yeah, it's not going to do it, and November may not even happen now. So that's the reason why sterling has fallen so sharply. I think 775 pips it was up until this morning's bounce. 4375, 136. Yeah, look at that low, 35.78. So 400 pips. Wow, that is a really, really strong move. And 400 pips. Sorry, 800 pips. Crikey, 800 pips. So we've seen sterling sharply lower because the market has had to reprice expectations of a rate hike, up from 80-90% apparently on interest rate swaps previously, a couple of weeks ago. It's now at 5 to 10 for a rate hike in May, so it's just not going to happen. So subsequently, sterling has been absolutely smashed. Now the question is, how far does it go before it starts to find a bit of support? Because at some stage, sterling will find support, and then the markets will start to think more about sort of the possibility that it's been swung too far the other way. Now, I don't think that's yet sort of been seen. Sterling yen, there's still room to unwind that. Sterling yen uptrend broken. Seems as though that selling pressure is still sort of falling through that. You've got crossover sell signal on the MACD lines, RSI falling away, stochastics selling into strength now on sterling yen. Euro sterling is at an interesting level, I would say. It's unwound a touch back again today, but certainly that sharp unwind back towards that pivot around 88 big figure. But look at the RSI up at 60, which is a level around where previous rallies have sort of tailed off. So it'll be interesting to see how the market reacts around this sort of move. So I just had a comment from John. There was some news about your Home Secretary resigning, along with the Brexit situation shut down, where it's shut down until Scotland was satisfied with border issues. Yes, Brexit has impacted on sterling in recent days. There's been a stream of negative headlines over Brexit, actually, affecting sterling. We've had the resignation of Amber Rudd, who is a pro-Remain Home Secretary, or was a pro-Remain Home Secretary. She's now been replaced by less of a Remain voice in the cabinet, a chap called Sajid Javid, that means the balance of Brexit has shifted a touch towards the harder side. But Parliament is a terrible impact on anyone who wants Brexit to happen. Parliament is sort of basically pushing it more towards a softer Brexit. Now, you could see that both ways. The House of Lords is standing in the way of Brexit, but also the Parliament, the majority of Parliament want to see a softer Brexit. But is that what the nation wants? It's just an ongoing debate in the UK, and something that is yet to be resolved. And ultimately, no one really knows how this is going to play out. So yeah, Brexit is not necessarily a positive, as is not the Northern Ireland issue. The Northern Ireland issue is a problem, unless there is a customs union. Northern Ireland is they're going to really struggle to resolve the border issue. But anyway, that's on sterling. So where does this what does this do? Where am I? For other markets as well. As I've talked about dollar, equity markets, interesting moves on equity markets. We've seen the DAX breaking out today. Look at that resistance at 12,600, breaking to the upside. Now, I would say that if you get a closing breakout above these sort of intraday highs, which is 12,647. If you get a closing breakout above that, I think that's a positive move, because you look at the RSI sort of into mid 60s, MACD lines, stochastics rising. I'd be looking at buying into weakness around 12,600 now. 12,600 to 12,647. I think that's a pretty decent sort of buy zone now on the DAX, because that's old resistance turned new support. FTSE 100 continues to climb. The weakness of sterling, as long as sterling continues to weaken, I think FTSE 100 is going to continue to climb. It is overbought on the RSI. Resistance around 7,600 by the way, but that uptrend channel is still pretty good. Now, that dollar strength I talked about previously has now had not a lasting impact, but certainly a big impact on gold. Gold has now closed at its lowest level of 2018. Now, is that a precursor to a downside break, would be my question. Is this going to possibly be where we start to see gold coming under pressure and closing below 1300? Now, if the dollar does break out above that 92.50 level on dollar index, I think gold will be breaking below 1300. I think that would be what we'd be looking out for. So I think that is that's the risk on gold, that dollar index continues to run higher. Now you've got the Fed tonight. The Fed is a key factor in the near term. Will the Fed continue to give signals that would suggest that it's moving towards 4 rate hikes this year? Now, if it starts to talk about inflation and the growing sort of issue of inflation, let me show you a chart on on inflation in the US. Here we see all of these inflation indicators picking up. This is the core PCE, picked up sharply to 1.9%. We've seen CPI at core and headline back above 2%. Now on Friday we've got the average hourly earnings. If they pick up again, which they're not expected to, mind, if they pick up above 2.7% to 2.8%, 2.9% possibly, will that start to sort of really generate dollar momentum again? I think it would. I think that would be the risk on payrolls report. So if we see average hourly earnings picking up, I think that's going to drive the next bout of dollar strength. And ultimately, what we've got across these markets, I think, is euro dollar is a sell into strength. I think cable is a sell into strength, 36.55 to 37.10. Pretty decent sell zone there on cable. Dollar yen, I think, has got more legs to run in it in this dollar rally, above 110, and then the next level is 110.50. Again, this is all sort of suggesting that the dollar is going to continue higher, which I think it is going to near term. I think near to medium term, the dollar is on a run, and I think that unless that the Fed on Friday, I think that unless the Fed tonight signals a sort of less of a hawkish position, which I don't think it is, and the risk would be that the Fed looks at what other central banks are doing and starts to sort of rein it in a bit in terms of the hawkishness, and also looks at maybe global factors of global sort of indicators slowing down. That would be the risk to a dollar rally at the moment, because the market is sort of really taking this ball from the increasing inflation indicators in the States and running with it. And if the Fed sort of takes a step back off that, then we could start to see the dollar just drifting a bit lower. But for now, I think the dollar is going to continue to run higher, because I think that the Fed is going to have to look at that inflation data. Is going to have to look at the fact that all these indicators are now ticking strongly higher, and I think it's going to start to factor in that into the statement more, and that's going to mean that the market starts to think about 4 rate hikes this year. At the moment it's 3.5, and 4 is sort of up in the air, but could see that the market's starting to factor in a fourth rate hike this year if that is the case. Payrolls on Friday, as I said, again is key. So on payrolls, we're looking for average hourly earnings picking up to 2.8%. Possibly that would be the surprise because at the moment it's not factored in. Now, on trades very quickly. I like the CAD. I really do like the CAD. I mean, I've talked about the Canadian dollar previously, and I had a short on dollar Canadian.